The CIPS Level 3 Module 1, that is Procurement and Supply Environments, is designed to enable you to be in a position to identify the range of environments in which procurement and supply is expected to operate and the external factors that can impact on overall success. Now, the good thing is that I'm here to make all that easy for you because let's face it, that is pretty much what Zero Network is all about. The module is divided into 4 main parts. That is, know the different sectors of procurement and supply, understand types of pricing arrangements in commercial agreements, know the external environment and its impact on procurement and supply, and finally, understand procedures that regulate procurement and supply. And of course, all those have respective learning outcomes, which you need to understand. Now, since there are 4 parts, okay, and we've talked about those 4 parts, this is the first part, okay? So this video is part 1, which means there are going to be 3 other videos that will follow this one. So in this case, what are we going to look at? We are going to look at, basically, you need to know the different sectors of procurement and supply. And in this case, you're required to understand 4 learning outcomes. So that means you should be in a position to define the different types and functions of private sector, describe the role and scope of procurement and supply in the private sector, describe the role and scope of procurement and supply in public sector, and then describe the role and scope of procurement and supply in not-for-profit and third sector. Let's jump into that, and remember, I'm going to add more resources in either above or below this video, okay, in the description. So ensure that you check that one out. Now, let's start with defining the different types and functions of the private sector. Now, when you are practicing, okay, when you're doing your procurement and supply, as a procurement and supply professional, well, you're going to be dealing with a lot of organizations, and these organizations will fall in different sectors. So in this case, you'll be dealing with, or you could be dealing with, things like sole traders, partnership, registered companies, incorporated and incorporated companies, SMEs, multinational corporations, all of which just form, basically all of which just explain the various types of business entities, which all have the reasons for the existence, and they all have their legal challenges and benefits, okay? So you need to understand all that, because the kind of contract that you might give somebody who is a sole proprietor or a sole trader isn't necessarily the way or the sort of contract that you're going to give a multinational company. Okay, the liabilities, okay, depending on the nature of that contract, can determine which organization you want to work with. So the other thing that you also need to know after understanding that is whether these organizations do they fall under private sector? Do they fall under public sector? Are they under third sector, basically not-for-profit sector? Anyway, let's start with the first one, in this case, types and functions of private sector. There are 2 kinds of entities that will fall under private sectors. In this case, we're talking about unincorporated associations and incorporated associations. Now let's start with the unincorporated association. And in this case, we're talking about the sort of associations or the sort of business entities in which the people who own those business or the owner of that business and the business are actually the same thing. For the most part, these are entities that are not incorporated, meaning they're entity whose existence, okay, is similar to that of the owner. So what do you think will happen if an incorporated association gets into debt? Simple. It means that the owners are liable for actions or debts of the company. Think of it this way. So let's say you have a shop, okay? You are selling, whatever, it's a shop, okay? And so you're employed, you have extra money, and then you decide, I'm going to use this extra money to put up a shop. So the shop and you are the same business. So if the shop is in debt, it means you're going to use your personal money to bail it out, okay? If you haven't paid rent, and then they come and lock the shop, and then they decide to auction things that are there, and if whatever is there isn't enough to cover for the, the debt, then they might just say, look, you own this thing and you have that car, you're going to sell that car, okay, auction the car and use it to pay off the debts of the shop. That is pretty much what it means when you and that business are the same thing. In short, there is no limited liability. Your liability is unlimited, in short. That is the thing with unincorporated association. In this case, you have things like sole trader and partnerships. Now, a sole trader, okay, let's start with that one. which is also known as a sole proprietorship, is a business owned by one person. And that person and the business are the same thing. That is actually the difference between one person owning a company, well, depending on which country you're from, okay? In some countries, minimum 2 persons. But the point is, owning a business and you and that business are the same thing, and you're one person, that makes it a sole trader or a sole proprietor. Now, there are advantages to doing this, okay? And if you're thinking, hang on, we are supposed to be doing procurement. Yeah, we are starting by looking at organizations that you're likely to be dealing with in procurement. So bear with me, okay? So one of the reasons why you'll even go ahead and register that business, okay? The sole proprietor. Because the question then can be, what if I've registered it? Does that mean it's still not, me and the business are the same thing? Yeah. The only reason why you register that business is actually there are 2 reasons. One is because you want a bank account and you want the bank account to have a different name than your name. Or 2, because you just want an official name that you can be putting on letterheads. But at the end of the day, that business and you, if you're the sole proprietor, is the same thing. So can sole traders employ other people? And the answer is yes. Look, the size is immaterial. The structure is also, it doesn't matter, okay? If you have a sole trader and you're employing other people, it simply means that that's a human resource problem. It's not a legal problem. Legally, it's a business. You and that business are the same thing. So what are the advantages of having this kind of a business? Well, for starters, the business is easy to start due to less legal requirements. You get to keep all the profits. You make decisions quickly. But then there are disadvantages. For example, ideas are limited since you are just, one person. Liability is unlimited, as you've already pointed out. Your debts end up becoming the business debts. The business debts are your debts. And in case of a lawsuit, they're just suing you. They're not suing the business. So, there are a lot of problems that comes with that. And also, you incur all the losses. So you can look at all that and then decide, what's the other alternative? Well, if you don't want to incur all the losses, then you can go with a partnership. What is a partnership? A partnership is the relation which subsists between persons carrying on a business in common with a view of profit. Now, you still need to remember that just like in a sole proprietor, okay, the partners and the business are still the same. Meaning you've just added someone else to help you share the responsibility of running the business. But as far as the law is concerned, you, that person, the partners, that business, same thing. The liability is still unlimited. The business debts are still your debts. The only difference here is that to what degree do we share this debt? Okay? So that's the thing. Now, the thing with partnership, okay? The advantages are that they are easy to form since they don't require many legal formalities. Business resources are easy to acquire since, partners can contribute towards such kind of resources. In case of professional firms, the specialization of labor, losses are shared among the partners, management duties are shared among the partners. But then there are disadvantages that comes with a partnership, okay? And some of these will include liabilities of partners for debt and obligations of the firm is unlimited. Sharing profits, okay? That's a disadvantage. A single partner's mistake affects all the partners. Disagreement between the partners often delay decision making. Death, bankruptcy, or insanity of a partner may lead to dissolution. Think of it this way. The reason why you create a partnership is just because you want to have more resources together or because you want to share the risk. So that's pretty much the thing there, okay? I mean, it's either you're just pulling your skills together or you're sharing resources. And in fact, it's not mandatory for partnerships to be registered, just like sole proprietors. But of course, if you don't register it, you're going to have other problems. So the law, depending on which country you're from, usually prefer to be registered because of something like paying taxes. Okay? If you and the business are the same thing and there are 2 of you, then whose PIN are we using when you're paying taxes? That's the thing. Okay? So that's one of the reasons why that business is registered. And if you register it, it means that you're going to create a partnership deed. So, okay, partnership is complicated. In fact, what I'm going to do is just add a PDF, okay, that is supposed to help you with that. Now, because, look, if you have a partnership deed, okay, that which is the agreement that you have as far as partners are concerned, that can help you to determine things like who's responsible for what, okay? Otherwise, if two people, usually it's 2 to 20 depending on which country you are from, if these people decide to carry on a business, okay, with the name of making profit, then we assume that's a partnership, because otherwise they just have turned it into a company, or it could be some charity. But if the view here is to make profit, it is a partnership unless they say otherwise. Now, because of the problems that can come with an incorporated association, the fact that the government expects a lot from you, people want to sue you, okay, because you're growing, you're making money, then usually those problems will lead you into deciding to incorporate the business. So that way, you end up with incorporated association, which is what you're going to talk about. So let's talk about that. Incorporated associations are the kind of associations or the companies or businesses in which the owners and the business are considered to be two different persons. In fact, to understand that, there is a case of Solomon, okay? So here's the thing. This guy, Solomon, owned a leather merchant shop. Had a shop, and things went on well, so he decided to incorporate it, which means he turned it into a company. So in this company, there was him, and he owned 20,001 share, his wife, and their 5 kids, okay? Each had a share. So in total, there were 20,007 shares. Now, as business went on, Solomon took out some debts, debentures, okay? And so a debenture is just, it's debt capital. Basically, in this case, it's like a bond. What is happening here is that you're giving company money, and the company acknowledges your debt, and then they'll pay you that debt, depending on the maturity period. And in between there, you'll get some premiums, depending on the arrangement. So debenture is pretty much what debenture is used in business, but when the government is borrowing money, they use bond. So debenture, bond, same thing. Difference that bond is for government or treasury bills, but debenture is for businesses. So he took out those, okay? And then he's running the business, but then things didn't go according to plan. So the business became insolvent. Now, what did Solomon do? What Solomon did was he took the money that was in the business and paid himself. Remember, he bought shares in the business, which means the business, owed him money. And that did not sit well with these debt holders, okay? The debenture holders. So they went to court. And in court, the court had to determine whether whatever Solomon did was right or wrong. Should he have paid himself first, or should he have paid the debenture holders or those unsecured creditors? So what do you think was the decision here? So the decision was simple, right? The court decided that, look, Solomon did not owe you money. It is Solomon and Company Limited that owed you money, the business. And so that case, Solomon v. Solomon and Company Limited, set precedent. In this case, the case set up the rule that, well, company, an incorporated company or an incorporated association, is a different person, and the people who own it are different persons. So the company debts are the company debts, and the owner's debt are the owner's debt. In short, there's a separate, personality, or it's a separate legal entity. See, that's the difference between incorporated associations and the unincorporated. So with the incorporated association, you're saying this is a different business. That's pretty much the thing there. So there are 2 main types of incorporated companies. In this case, we have private limited company and public limited company. And the difference between those two can come in the form of ownership, meaning what? With private companies, obviously, they are owned by private individuals. As the name suggests, they buy shares in those companies, or they're the ones who've incorporated those companies, so private individuals. Public companies owned by the public, okay? Number 2, the way they raise capital. So private companies will obviously raise capital through sale of shares, while public companies, private companies will sell their shares to private individuals. That's the thing. Public companies will sell their shares to the public, okay? So think of it this way. Google, Facebook, Apple, these are public traded company. And then that company that is owned by your cousin, that's a private company, okay? Another difference is the number of directors, which will depend, okay? Like in my country, a private company must have at least one director. Public company must have at least two directors. Okay. Then the number of members, sometimes you refer to shareholders as members. I mean, not sometimes, most of the time. So in public companies, again, this will vary depending on which country you are from. But yeah, with private companies, there is a number of members that are required, like in this case, 2 to 50. With public companies, since it's a public company, there is a minimum number of shareholders or members that you can have. In my country, that is 7. But there is no maximum because it's a public company. So those are the differences. But there are a number of benefits that come with this kind of business. For instance, perpetual succession. You see, unlike a sole proprietor, where the owner dies and the business dies, with incorporated association, it's just a matter of, you die, another person becomes a shareholder and the business continues. So perpetual succession. It can own property under its own name. So you have a company, an incorporated company, okay? That company will own property. So you have your car, the company has its own car. Which is something that, you think about it. If you don't want to have anything under your name, you can just have it under the company's name because the company can own property. Their liability is limited, which is a cool thing because if that company has a debt, that is the company's debt. So if the company owes 20 million and you have like 100 million, that's on your personal money, 100 million. You don't have to pay the company's debt. You can go bankrupt. And the reverse is also true. You owe somebody's money, you owe somebody money, and you have a company. Well, they don't have to take the money from the company. Your debt is your debt, the company's debt is. In fact, your relationship with the company is limited to the shares that you have. And also, in some cases, you can have tax benefits and write-offs. So this point is something that I want you to think about, just a practical application. Choose an organization you're familiar with. Make a list of some of the things that it might need to purchase. Then, think about the differences between incorporated and unincorporated companies and decide which type is best suited for each type of purchase for the organization and why. So think about the company and then decide, okay, this one goes to an incorporated, maybe this one will purchase from a sole proprietor, this one will purchase from a company. That's pretty much the thing. That is just a practical exercise that you can do. And with that, let's move on to the next thing. Talk about size and scope of private sector. So size of these businesses can be used to distinguish them. So for example, we have small and medium-sized enterprise, in this case SMEs. This is an enterprise that is independent of other companies and is defined in terms of the number of employees it has. That definition, the SME, can also be extended to include, that we can add something to it, okay? So in this case, you can have micro, small, and medium enterprise. That is MSME. So in this case, we're talking about a company, okay, or a business that has fewer than 10 employees. The challenges for SMEs, okay, will include things like lack of access to finance, regulatory requirements, insufficient management skills or resources. Is a practical question for you, remember, learning by doing. So you learn, you practice. So the question is, state 2 challenges that faces SMEs and suggest how they can overcome such challenges. So on one side, you have small and medium enterprises. On the extreme end, you have multinational companies. So in this case, you are dealing with companies like Coca-Cola, Unilever, Samsung. These are companies which have assets and facilities in multiple countries, but are all managed from a central company. Now, another way to look at such companies, another way to define such companies, is that these are companies that get at least 1/3 of its revenue from overseas subsidiaries. Okay, so let's do a quick recap here. So far, what do we know? Here's the thing. Unincorporated and incorporated association, we know those ones, and we are aware of the examples, benefits, and challenges. And you can also classify private sector companies according to their size. So here's another question for you, okay? Learning by doing. What are the benefits of private sector organization to a country they exist in? Think about it. The private sectors, what do they do for that country? So think about that, okay? And, Now, that summarizes that first part, the first learning outcome. Let's move on to the next one. Let us now describe the role and scope of procurement and supply in the private sector. So far, let's see, in the other lessons, we've looked at all these, sole proprietor partnership and all that. Now, how does procurement come in? Let's talk about that. Let's talk about the way procurement come in all these, or rather, the role that the procurement plays in all those businesses. And to understand that, let's start with the value chain. So an organization will take inputs and process them into outputs. So in this case, you're going to have inputs, okay, like raw materials, which are processed into the goods or services that the customer buys or that you buy. So that entire thing is a chain, and in that chain, we need to create value. The transformation of inputs into outputs will consume resources such as finances, raw materials, workforce management, equipment, and buildings. And again, doing all that doesn't really mean that the business is going to be profitable. You can do all that and still incur a loss. Again, as I said, it all comes down to value, okay? The value chain, or in this case, Michael Porter's value chain, which is what we are using here, is divided into primary activities and secondary activities or support activities. So in this case, let's start with the primary activities. What are the primary activities as far as the value chain is concerned? And so we have inbound logistics, which involves interaction with suppliers and the activities of receiving, storing, and distributing supplies. Operations, in this case, we're looking at all the activities involved in turning the inputs into outputs such as goods and services. That's operation. And then the third one, we have outbound logistics. So activities that receive products from operation, store them, and deliver them to customers. And then you have sales and marketing, which are basically the activities that, help customers to know that you exist. It's one thing to have a product. It's another thing for people to be aware that you exist and you have that product. That is where sales and marketing is coming in. And finally, we have the after-sale services. Those are activities that maintain products after sale, okay, and achieve customer care. Let's look at that from a practical perspective. So here's a practical example of how that takes place. Let's say you're in a computer assembling business, okay? You're going to need inputs. So in this case, motherboard, microchips, and all those things, that computer, whatever, okay? You're going to need all that stuff. So you put together all that, okay, into an actual computer, and that is operations and output. Now the computer has to be stored somewhere, in this case the computers, because you don't just make them and you sell them, okay? So they have to be stored somewhere where they're later going to be transported to the buyers who've bought them. So in this case, we're talking about outbound logistics. But if people are not aware that you have these computers, or that you're making them, then it means they're not going to buy from you because they are not aware of your existence. And that is where the issue of sales and marketing come in, okay? And of course, once the person has bought a computer and they have a problem, maybe they bring it back, you fix it for them if it has a problem. What is that? After sale service. So you see, that's value chain, okay? Inbound logistics all the way to after sale services. Throughout that entire process, value has to be added. That is why it's called a value chain, because if we bring in inputs that are substandard, whatever operations you're doing here is going to be affected because whatever inputs we brought were substandard. Okay? Now, here's a question to you. Explain how primary activities of the value chain apply in a car assembly company and in a law firm. So, okay, car assembly, law firm, how does that take place? And let's quickly look at the next one, okay? In this case, the support or the secondary activities. In this case, we have farm infrastructure, human resources, technology, and procurement. And in this case, we're just concerned with procurement because this is procurement related. So let's talk about that. At its most basic, the role of procurement in the value chain context is to acquire all the resources and other inputs the organization needs to carry out its primary activities. Now, the reality is that this is going to start with need analysis, okay? In which case, you're talking about determining the future and the current need of the organization. regarding the product and services it wants to offer to customers. So by doing that, it means that when you are making those, whatever it is that you're making, you're actually creating the operations, whatever the operation is using, okay, to create the product or the goods and services. Those things will actually give us the goods and services that are required, okay? Or we provide the actual goods and services that the operation requires. So business need analysis. It's not just about the business alone. It's also all the way to the value chain. Whatever it is that you are getting, is this thing going to make sense to the people at the operation and then doesn't make sense to the final product? So we need to look at things like those ones, okay? Now with proper business need analysis, okay, the operations will then go ahead and design the products that are going to meet the customer's needs. And they do this by looking at key customer segments, the value proposition for those segments, and the channels that will be used to provide the product or service. Now that on its own will pose 3 questions. What do you mean by key customer segment? What do you mean by value proposition? And channel in this case, what does it refer to? Key customer segment is a method of splitting a company's clients into groups so that marketing efforts can be more focused. So think of customer segment this way. If you're watching this video, you could be watching this video either because you're just interested in acquiring knowledge, procurement related, or you're sitting for a procurement exam, maybe CIPS exam, okay? So if you are sitting for procurement, the CIPS exam, then that makes you a segment, okay, students, but specifically CIPS students, okay? Anyway, let me know, why are you watching this? So let me know in the comment section, like, is it just for general knowledge or is it exam related? Or you can talk to me through social media at The Right Network, okay? Be it in Facebook, X, Instagram, TikTok. So at The Right Network, you do that. A value proposition refers to attributes of a product or service that makes it attractive to a customer, while channel refers to ways a product and service get to the customer. So there is specifically which customer you're targeting, what exactly about that product makes it attractive to that customer, and how does that customer get whatever it is that product is all about. So how do they get the product in short? So value proposition, key customer segment, and the channel. All those ones are things that the operations has to factor in when they are creating the product as part of the value chain. And the procurement has to ensure that they get what they need for those. Anyway, let's move on. And in this case, let's talk about business requirements definition. Procurement will perform a number of functions in business, and 2 of these will include deciding on what to buy and where to buy it. Now, the question of what to buy will be answered by requirements definition, also known as business requirement definition. Now, one model that can help you to come up with business requirements, or to help you write a business requirement, will be the Raksky model. The model takes 6 themes of user requirements and ranks them in a specific order. So in this case, you're going to have number 1, regulatory. So here you look at the legal or regulatory requirements in relation to what you're dealing with. For example, food, okay, hygiene regulations in catering industry. Number 2, assurance of supply, okay. In this case, you're interested in knowing if the products will be available when you need them. I mean, is the supplier going to deliver those products if and when you need them? So you need that assurance. Number 3, quality, okay. So the consistency, reputability, and fitness for purpose of the goods and service that you procure. So that is also important. Now, the 4th one is service, okay. So factors associated with the way product or service are supplied, for example, flexibility, availability, or support, such as the help desk. And then you have cost, which you'll consider once you've taken all those things into account. So you never really start with the cost. You look at all these things and then ask yourself, what is the cost of all that? And finally, innovation. For example, the use of emerging technology and capacity. So RAQSCI. That's the thing. So if you're doing procurement, you're looking at, you're writing your business requirement needs. It's like, okay, what are the regulatory needs? Okay. What are the quality assurance, supply assurance, all that stuff. Now let's talk about market intelligence. And in this case, once you're done defining your business requirement needs, there is still the question of the market, okay? Procurement needs to carry out some market intelligence research to analyze the supply market. And why do you do that? Okay, the reason for doing that will include things like to identify where there might be leverage to drive out saving or other benefits, to help decide how best to approach the situation, or shaping of the market to your advantage. Number 3, to identify any potential risks that might exist so that you can plan how you will mitigate them if they actualize. Number 4, to help plan your negotiation strategy from a position of knowledge about suppliers' strengths, weakness, and any trends in the market. So there are a lot of reasons. You can add as many as you want in that list. The point is you always need to do your market research. Look, it's one thing to be in procurement and then not know how to negotiate. So check out the description. You'll be able to access tutorials on negotiation, okay? And video lessons, PDF downloads, practice exercises. So if you're interested in that, check them out. And by the time you're done, you'll be in a position to understand how to analyze approaches to negotiation of agreements made with external parties, how to prepare for negotiation, what techniques are available to ensure successful outcomes in negotiation, as well as how to formulate your negotiation strategy. So go ahead and check that out. It is important to find facts and data about suppliers in the market and their products, any niches within the market, trends in technology, the capabilities that are needed to succeed in the market, and how costs behave. So as you are doing your market research, okay, as you're going through your market research, there are certain things, okay, there are certain questions that you need to find answers to. Some of these questions will include, is demand for your product or service growing or shrinking? What are the general economic and market trends? How might customers' requirements and buying behavior change in future? What new products are in your supplier's pipeline? Could they make the one you buy look outdated? That is something else. How are competitors in the supply market changing? What are their plans? Will any forthcoming legislation affect your market? Go ahead and collect the information. That is what you're going to do as a procurement, professional. And this can be, when it comes to collecting information, maybe you go out or you do some desk research, meaning you're just there looking at the internet, sending emails and things of that nature. Okay? So whichever way you use, that's not the thing here. The thing is that you have to do your research. Now let's move on to the next thing, which in this case is spend analysis. Spend analysis identifies exactly what items the organization buy, who in the organization buys them, who they buy them from, and in what quantities, at what price. This is important because unless you know what exactly it is that you're spending on and how much you're spending on that thing, you can't be certain that you can identify opportunities to make savings. So some of the benefits of doing this, some of the benefits of spend analysis will include opportunity to save money because you'll have full visibility of spend across the organization. Okay? A basis for ranking suppliers for preferred supplier status and for your supplier relationship management. Ability to make better decisions based on facts. Capacity to identify who is buying off contract so that you can educate them as to what contracts to use to make saving, as well as opportunity to identify what spend should have contract but doesn't. If you are sourcing, and that is something you're going to be doing a lot of in procurement. So if your sourcing is to be successful, then you need to communicate with all the relevant stakeholders interested in that sourcing as far as, or you need to think of it this way, you need to communicate with all the participants, okay? Because stakeholders is just a big, it's another thing on its own. Situation, target, proposal is a method of achieving these. Here's how that works, or here are the steps involved in that. Number 1, brainstorm, okay? So in this case, you need to list everything you know about the current situation as far as our sourcing is concerned. This will include how much you spend and with whom, non-supply problem, upcoming changes in legislation. And remember, you're not doing this in a vacuum. We've already talked about that. You need to involve all the relevant parties. So you aren't just doing this in your office because you think it's cool to do that in your office. Now the next thing is set a target. Okay? These are a description of where you want to be. Remember, there's a difference between a target and a solution. Think of it this way. If you don't have money, so you're broke, and then you say, I want to be wealthy. So that's a target. But then finding a job is a solution, one of the solutions as far as creating wealth is concerned. So there's a difference between target and solution, and you need to know that. So targets have to be smart. That is specific, measurable, achievable, realistic, and time-bound. Now the third thing is produce a proposal. This is your plan for getting from where you are now to where you want to be. And finally, summarize the entire thing. Okay? So that is the thing with situation, target, proposal, which is supposed to help you as you're planning for your outsourcing. Right, so let's move on. I mean, there are a lot of things. So far, we've looked at a lot of things. All these things are just leading us towards one thing. We started by looking at the various business entities that you could be dealing with. And now we are looking at how procurement fits in all those situations. And you're starting by just understanding the role of procurement. Okay? Now let's talk about the procurement event. So at this point, we understand what the business needs, because as procurement, business requirement needs, you understand that. And we have some form of procurement strategy. So the next thing is procurement events, basically a set of activities that is responsible for going out to the market and getting a contract that meets the requirement of our sourcing strategy. And so at this point, what's happening? You might choose to go with a tender because you don't have time for negotiation. I mean, there are advantages and disadvantages that tendering will, create. Or you can actually just negotiate with suppliers, and that depends on whether or not you're good at negotiation. And we've talked about that. If you're interested in learning how to negotiate, you know what to do, right? So that's the thing. But once you have a contract in place, you need to make sure that the delivery of goods and service comply with the terms of the contract. So the contract management can be summarized in the following way. So let's see. How do we manage a contract? And these are summary. So we have contract design, contract administration, contract performance, and contract completion. Let's start with the contract design. With a contract, you must know what you want. And that is the reason why you do a need specification. As a buyer, you don't have a monopoly on good ideas. So depending on the circumstances, allow for suppliers to also suggest what they experience, innovation, and what they have seen on other contracts. So don't be like, do these and then the supplier is saying, look, we've done that before. We did this for this client or that client, and this is how it ended. What if we go this way? So, be open to suggestions. You're not going to do them. You just listen to them and then decide, I'm not interested. But the key thing is you have to be open to suggestions. So that is the thing about specifications. Anyway, let's move on. You also have to ensure that the contract is clear on its allocation of risks, the level and quality of service required, and how value for money is delivered. So remember that things can change, okay? Especially if the contract is going to take a longer time. The longer the contract in terms of duration, the more things are going to change in that contract. And so you have to allow for, flexibility for such changes. The thing is, if you're interested in learning about contract, I've done a course on commercial contracting as well as contract law, so you can always check those out. Now let's move on. Contract administration, that's the next stage. So with contract administration, you're talking about how the contract is going to be managed. And that means looking at things like ensuring everyone understands their roles and responsibility in the contract, overseeing the contract to ensure that the value of money gets delivered, coming up with a risk management plan, dispute procedures. The thing you have to understand is that a contract is a legally binding agreement. So the question is always exactly what is it that you've agreed on and how does that work? So that is the reason why administration is important. But what else is important is contract performance. With contract performance, in this case, you need to have a system in place to monitor and report whether the supplier is delivering as expected. So what are some of the things that you're going to be looking at in this case, when you're trying to manage performance? In this case, you look at things like key performance indicators, And that is the reason why KPIs are important. So at any point when you're contracting, make sure that before even that contract is signed, before you even have, like when you're getting into that contract, ensure that you understand the performance indicators that you're going to be monitoring in that contract. And also make sure that the supplier is aware if that is going to help. But for you, you have to know these are the things I'm going to be looking at. Okay, delivery, maybe, quality, okay, things of that, payment schedules depending on who you are in that contract. So things like those ones. Next, whether there's a continuous improvement, and again, that will depend on the length of the contract. If a contract, as we said, if it is taking a longer time, then it means there are innovations, the improvements that will probably be required depending on the circumstance. And number 3, the nature of communication in the contract. So those are things that are going to help you with contract performance. So the other thing that is also part of contract management will be contract completion. And this involves activities that take place when the contract ends, okay? Or when the contract is about to end. So things like contract renewal or transition plan if you cannot go on with the former supplier. As part of learning by doing, here's a question for you. Most organizations just file away a contract and only looks at it if something goes wrong. Why do you think this is a bad idea? In short, what are the benefits of contract management? Right, so come up, with that answer. And again, look, as you're going through this, if you have a question, don't just sit there with your question. Ask the question either through the Q&A, through social media, whatever. The point is, ask that question because it's learning by doing, and that's how you learn. You ask the question, you get an answer. You ask a wrong question, it doesn't matter. It still gets answered the way it's supposed to be answered, and we learn. Okay, let's move on. So at this point, let's talk about the role and scope of procurement and supply in public sector. Because so far we've been looking at procurement from a private sector point of view. But what about public sector? What roles do procurement play in public sector? Public sector are often organizations that are owned and run by the state. And depending on which country you're from, such organizations are supposed to offer services like education, law enforcement, some form of healthcare, social services, some form of transport, okay, waste services. And again, most of these will just depend. Those services are going to be distributed between the central and the local government, which, again, as I said, it depends on how your how your country is structured. So let's start by looking at the role of procurement and supply, okay, in those public sectors. To help set a picture of how procurement actually works in public sectors, then we need to understand, or we need to look at commissioning. Commissioning is the process of deciding how to use the total resources available in order to improve outcomes in the most efficient, effective, equitable, and sustainable way. So the commissioning cycle, okay, we look like this. So in this case, we have what are the needs of the individuals, what services will best meet those needs, how best can those services be provided, and are those services meeting the defined needs? And you can sum it up this way, okay, that entire thing. So we can say, which services do we need to provide? The right services, which is what commissioning is all about, all right? So we need to provide the right services. And then how best to provide those services? And that is by ensuring that we have the right supplier at the right cost, which is where sourcing comes in. And number 3, how best to contract for those services. And that's pretty much where procurement comes in. So let's talk about public sector procurement rules. Now, transparency is a big deal in public sector because let's face it, you're dealing with people's money, all right? And by people in this case, I mean the public. So the public will demand accountability. And so that's important. So that's the reason why transparency is a big deal there. And this is why tender is often used. So what are the processes used to manage and issue tenders? And most of these, again, will vary depending on which country you're from. But for the most part, we have open procedure, we have restricted procedure, competitive bidding, competitive dialogue procedure, competitive procedure with negotiation, as well as innovation, partnership procedure. So let's go over all of these. And let's start with open procedure. So in this case, you allow everyone you think is qualified to submit their tender bids. This procedure should be used where you know the market is small and that there are relatively small number of suppliers who will attempt to bid for the work, because otherwise you're just going to be flooded by tender bids from people you're not even interested in working with. Now, number 2, we have restricted procedure. And this means you're restricting the people who can actually submit their tender bids. And sometimes the way you do this is through pre-qualification questionnaires. So you give out questionnaires, okay, to pre-qualify suppliers. And then the suppliers who are shortlisted, those are the ones who are invited to tender, okay? So you get rid of some people through that process. And number 3, we have the competitive dialogue procedure. What is happening here is that you're actually getting into conversation. You're getting into dialogue with suppliers, okay? Suppliers who are likely to do whatever it is that you want them to do. And through the dialogue, you're trying to figure out who you can work with. Basically, the main features here are dialogue is allowed with selected suppliers to identify and define solution to meet the needs and requirements of the contracting authority. The award is made only on the most economical, advantageous tender criteria. Dialogue may be conducted in successful stages with the aim of reducing the number of solutions or bidders. And then there are explicit rules regarding post-discussion. And so seeing how time-consuming that is going to be, this is not something that you just want to do anytime you're tendering. And so you're better off using the other two, okay? The open and restricted. Right, as always, if there is any question, let me know. So let's talk about procurement and achieving efficiency saving. When talking to most people about procurement in terms of saving, they straight up just think, well, the only thing procurement will help us to save is price. Yep, price is just one thing that procurement is going to be, well, helping you to save. There are other ways in which procurement can help in achieving efficiency saving. And in this case, you're talking about things like reducing input for the same level of output and quality, additional outputs such as enhanced quality or levels of service for the same input. And that is pretty much the reason why understanding value chain is important, because once you understand your value chain, then you know how procurement can come in to help you with efficiency throughout the entire process. The difference between cashable and uncashable saving is important when looking to achieve efficiency saving. Cashable savings are direct financial savings that release money to either be banked or spent elsewhere. Non-cashable saving come about from an improvement in the use of an organization's resources. So both of those ones are important, okay? But then you do realize that only one of them is going to affect how much money you have. Anyway, examples from such savings will include things like a lower price from either the last price paid or from the bid price in a tender from a calculation of total cost of ownership, a price avoidance, which is the amount by which a price increase set out in a contract is reduced. Number 3, better contract terms that result in a lower total cost of ownership. And finally, improved quality, which lowers total cost of ownership. Some things that can also help you with saving will include, things like electronic tendering, self-service purchasing systems, consolidated payment systems. So the point is, look, in public sectors, okay, or pretty much in whatever sector, but in this case, since we're talking about public sectors, procurement can really help in areas that, it can really help you to save. That's the thing. Also, it can help you to get whatever it is that you're looking for, the inputs, okay? And remember, it always comes down to getting things at the right price, okay? From the, getting things at the right price, the right quality, the right quantity, and ensuring those things are delivered to the right place at the right time. All those, okay, are things that procurement will help you to achieve. Right, let's move on. Now let's talk about the role and scope of procurement and supply in the not-for-profit and third sector. Look, we've talked about public sector. We've talked about private sector, okay? Basically what procurement is likely to do in all those sectors. But what if you're dealing with an organization in which you're not really interested in profit? You're not driven by profit. So how does procurement come in? Let's talk about that. And let's start by defining the not-for-profit and third sector. So again, as I said, these are organizations which don't have profit as their motive, okay, or their reason for existence. They basically seek to make social wealth rather than monetary wealth. Now, example of such organizations will include things like mutual and cooperatives, voluntary groups, housing association, self-help groups, charities. Now, with these kind of organizations, the first thing that is important to them is accountability. So they really care about accountability. That's a big deal to these organizations. Ibrahim and Westband identify 4 core components of accountability. So in this case, we have transparency, which involves collecting information and making it available and accessible for public scrutiny. Number 2, answerability or justification. These require providing clear reasoning for actions and decisions, including those not adopted, so that they may reasonably be questioned. Number 3, compliance. This is brought about by monitoring and evaluation of procedures and outcomes combined with transparency in reporting for those findings. And then you have enforcement, okay? This might be in the form of sanctions for shortfalls in compliance, justification, or transparency. So what do you have here? 4 things. We have transparency, answerability, compliance, enforcement. So who are the people who are really keen on this accountability? Who are the recipients for accountability? So recipients for accountability, in this case, there are a number of parties who might demand accountability from these third sector, from these not-for-profit organizations. And in this case, you're talking about people who fund them, okay? So in this case, there is upward accountability. People who receive the services provided by these organizations. And in this case, you're talking about client accountability. And then we have people who just work for those organizations, so work or are within those organizations who also want accountability. So in this case, you're talking about internal accountability. Let's talk about the actual role of procurement and supply in the not-for-profit and third sector, because we sort of just defined what those things are and we talked about the accountability, right? So specifically, how does procurement come in? And you might assume that, well, if these people are not driven by profit, then that means that the role of procurement isn't going to be that difficult. And you'll be surprised, okay? It isn't going to be easy either, okay? So that's something else. In addition to traditional roles for procurement, such as buying competitively and managing supply risk, the role of procurement and supply in this sector is to support and reinforce the organization's objective. And procurement can do this through the way in which it specifies the goods and services it procures. So in this case, look, when it comes to specification, there are 2 kinds of specification that you need to understand. There is performance specification, where you want, when you're talking to your suppliers, you're telling them, I want something that will do ABCD. It's like, I need a website, okay? And I want this website to be dynamic, not static. People can log in, create accounts so that they can access all these video lessons, okay? And practice exercises, and they can download stuff, okay? Some of those are going to be free, some are paid. I want it to integrate with the payment, whatever, all that stuff. And let's call it Zerite Network. Okay, anyway, look, the point is you're telling them what you want the website to do, okay? So that's performance, all right? So their job is to ensure that whatever you want does that. But then you have conformance specification, in which case it's like, this is what I want to happen, and you guys have to conform with this. Like in the case of engineering, you're not going to leave them space to experiment and come up. You just want them to be creative. You just want them to do the thing the way you want them to do it. So performance specification, conformance specification, all those things are things that procurement needs to come up with, okay? So how do they help? Number 1, well, through the way they create specifications. Number 2, structure tenders and award criteria. And the thing you have to understand about the award criteria when dealing with these not-for-profit organizations is that their criteria can be different. For example, environmental objective can specify that suppliers should adopt a recycling regime and have environmentally sound policies. Number 2, human rights as an objective can specify that suppliers must demonstrate what they're doing to combat human trafficking in the supply chain. Animal welfare as an objective can structure its award criteria around suppliers who can demonstrate how they operate humane animal welfare process. So the point is, yes, we are going to award tenders, but our criteria is going to be slightly different from the sort of criteria used by the profit-based organizations, be they in public sector or in private sector. Next, manage markets in a way that encourages suppliers who have similar objectives and values to its own. Number 4, demonstrate value for money. And number 5, provide information to comply with regulations. Right, so that's the thing, okay? In this case, now you understand how procurement fits in public sector, how it fits in private sector, and how it fits in not-for-profit. I mean, look, there are a lot of things, there are all those exercises, okay? The questions that you're supposed to find answers to, learning by doing. So don't be lazy, okay? And remember, we also started by looking at the various form of business entities or associations, the incorporated and unincorporated advantages and things of that nature. So if you have any question, obviously, do let me know, okay? See you in the next video.